You know what's literally one of the most painful feelings in day trading? It's crushing it early in the morning, feeling like an absolute genius, and then watching every single cent of those profits bleed away by the afternoon. You start out totally green, your confidence goes through the roof, and suddenly you're taking these low-quality setups that completely violate your system. Before you even realize what hit you, you're staring at a red P&L, just sitting there wondering what on earth went wrong. Well, today, we are tackling this head-on. We're breaking down the ultimate solution to this exact problem, and it's called the Giveback rule. Now, this isn't just some nice theory. It is a highly tested, production-ready system that actively protects your profits before your emotions can step in and turn a massive winning day into a losing one. So let's jump right in and see exactly how you can implement this into your trading business today.
Look, we've all been there, right? You wake up, you do your pre-market prep, you execute your plan perfectly right off the open, and boom, you are up big by 11 a.m. You feel absolutely invincible. It feels like you finally cracked the code to the market. But then, the morning volume dries up. The afternoon chop sets in. You get a little bored just sitting on your hands, so you start scanning the charts for things that just aren't there. Maybe you size up recklessly just to feel something, or you take a trade that definitely wasn't in your playbook. And just like that, you start bleeding profits. That emotional roller coaster, going from the absolute high of a massive win to the crushing, self-loathing frustration of giving it all away, that is exactly what destroys trader consistency over the long haul.
Think about the real tangible cost of that lack of discipline. Imagine being up $2,000. You've literally hit your entire weekly goal in a single morning. But instead of walking away, closing the laptop, and actually protecting that hard-earned cash, you keep pushing your luck. And by 3 p.m., you aren't just flat, you're actually down $800. So what was a $2,000 winning day just magically transformed into an $800 losing day? That is a massive $2,800 psychological hit. It completely shatters your confidence. You go to sleep angry, and guess what? That baggage carries right over into your next session, practically guaranteeing you're going to revenge trade. The Giveback rule is a non-negotiable risk management tool built to prevent this devastating scenario entirely. It literally takes the power out of your hands when your brain gets compromised.
So, what exactly is this rule? Basically, the Giveback rule is a structured mathematical risk management tool. It tells you exactly when to stop trading after you've given back a very specific portion of your daily profits. Think of it like a circuit breaker for your trading account. Because usually, we wait until our account goes completely red to realize, oh man, I made a huge mistake. But this activates a hard profit floor. Once your unrealized daily profits hit a certain level, that floor is locked in. It's set in stone. If the market shifts or your edge suddenly disappears and your profits drop down to that floor, the screens go off. You are done for the day. You don't try to win it back, you just get up and step away.
The true beauty of this system is just how incredibly simple it is to execute. It really just boils down to 3 straightforward steps. Step 1, define your daily profit high. You have to know exactly where your account peaked. Step 2, decide exactly how much of that profit you're allowed to give back. This is going to be your give back percentage or your fixed dollar amount. And step 3, if your P&L drops by that amount, you stop trading immediately. No exceptions whatsoever. There's absolutely no just one more trade so I can make it back to the highs. You lock in a profitable day instead of risking the full gain. This right here is the exact moment you transition from being someone who just randomly clicks buttons to a true professional who manages risk.
Let's run some quick math so you can see exactly how this plays out. Let's say you're having an awesome session and you're up $1,000 on the day. And let's say you've decided your giveback rule is 30% of your peak profits. That means your absolute max allowable giveback is $300, period. So your new profit floor is now locked in at $700. Now, can you keep trading to try and maximize that winning day? For sure. If your absolute best A-plus setups are still there, take them. But the absolute second your daily profit drops from $1,000 down to $700, you close the platform. You are done. You walk away with $700. And hey, your ego might be a little bruised because you didn't keep the full $1,000, but let's be real here. Locking in a $700 day is a massive victory. You protected your capital and, even more importantly, you protected your confidence for tomorrow.
Now, if you measure your performance in risk multiples, or R, which is what most pros do, you can really see how this builds a protective wall around your account. Let's say your daily P&L hits a peak of plus 3R, meaning you're up 3 times your standard risk per trade. At that moment, your giveback floor automatically activates, let's say down at plus 1R. If you start losing your edge in the afternoon and you drop to that plus 1R mark, you stop. The genius of this is that you are now statistically guaranteed to end the day green. That plus 1R gets banked no matter what. Without this automated stopping point, you run the massive risk of plummeting into that devastating negative P&L territory, completely turning a great technical performance into a total psychological failure.
But here's the real game changer, the mindset shift required to actually pull this off. Amateurs out there, they operate purely with a reward mindset. They enter a trade and their brain immediately goes to, how much money can I make right now? They literally treat the market like an arcade game, just constantly trying to run up the highest possible score. But professionals, they operate with a risk-protective mindset. They treat trading like a real business, focusing heavily on how much money they can keep. A green day, even a small one, is incredibly valuable because it builds that compounding consistency you need for long-term success. Pros don't negotiate with their emotions when they're slipping. They use the giveback rule to create a clear, cold, emotionless stopping point that preserves their business.
So why is having this automated stopping point absolutely crucial? Well, because human psychology literally works against us in the financial markets. After a winning streak in the morning, our brains get this massive hit of dopamine, and we become wildly overconfident. We feel totally invincible, so what do? We start sizing up recklessly. We force trades that aren't even in our playbook just because we're craving more action. Now take that fading mental focus and combine it with slower, choppier afternoon market conditions. Institutional volume totally drops off during lunch, the algos create all this massive chop, and those beautiful clean trends from the morning are long gone. It is quite literally a perfect recipe for disaster. The giveback rule steps in and stops you before your own degrading discipline can wipe out your account.
And the cool thing is, there isn't just one single way to do this. Think of this like a menu of options, so you can pick the framework that actually fits your specific trading style. For instance, some really active scalpers might stop after returning just 25% of their open profits simply because their edge relies so heavily on quick momentum. Swing traders, they might use a much wider 30 to 50% give back on their total gains just to allow their trades a bit more room to breathe. And hey, if you hate calculating percentages on the fly while you're trading, you can just trigger the rule after taking exactly 2 consecutive losses once you're already green, or you can set a hard locked dollar amount. Honestly, my personal favorite, stopping immediately if you break even one major trading rule while profitable. At the end of the day, the math matters way less than your discipline to actually follow the rule you set.
But we've got to talk about where retail traders get this completely wrong. First off, they'll dutifully set the rule during their pre-market prep, but the second the heat of the moment arrives, they just totally ignore it. Or they'll make the giveback limit so ridiculously huge that it basically defeats the purpose of even having a floor. But honestly, the absolute most toxic mistake out there is the house money fallacy. It's this weird psychological trap where you feel like because you're up $1,000, that money somehow belongs to the market, so it's totally fine to gamble it away on subpar setups. That is straight-up casino psychology, and I promise you, it will bankrupt you over time. And finally, people just fail to actually track when these givebacks happen, which means they never adapt and they never actually learn from their mistakes.
And that brings us to arguably the most important point of our entire discussion today. Just sitting there recognizing that you have a giveback problem? Yeah, that's simply not enough. You cannot fix deeply ingrained behavioral loops without hard, objective data. Your brain is literally wired strong neural pathways around your bad trading habits. So even when those habits are actively losing you money, they still feel comfortable and natural because they're familiar. To break that cycle, logging trades in some basic spreadsheet just isn't going to cut it anymore. You need a system that holds a massive, unignorable mirror up to your trading, showing you the exact data of what you are doing wrong and exactly when you're doing it.
And this is exactly where a tool like TradeZella comes in. It's literally the bridge between knowing you need this rule and actually having the discipline to follow it. What I absolutely love about TradeZella is how it completely solves the accountability problem. It auto-syncs your daily P&L and your broker data, so no more manual entry, right? Because let's be honest, we all tend to lie to ourselves a little bit or completely ignore those ugly red trades when we have to log them manually. You can log your emotional states before and after trades, tag your specific mistakes, and actually filter your dashboard to review the exact days you started green but ended red. You can track your giveback violations and see exactly how many thousands of dollars those mistakes are costing you every single month. You even get to monitor your Zella score, which is just a fantastic, objective grade on your overall trading discipline.
But this right here is where TradeZella becomes an absolute game changer for your workflow, the trade replay feature. Look, a static chart at the end of the day makes every single exit look completely obvious in hindsight. You look at it and go, duh, why didn't I just sell right there? But Trade Replay actually reconstructs your trades tick by tick using 1-second data. You can sit down after your session, hit play, and watch your positions unfold exactly as they happen in real time. You literally get to feel that intra-candle panic all over again. And by doing this, you can pinpoint the exact moment your discipline faded. You can find the precise tick where emotional trading took the wheel and clearly see the behavioral triggers that caused you to give those profits right back to the market.
So what's the bottom line here?
The Giveback rule is absolutely not about trading with fear. It's not about magically cutting your massive winner short or arbitrarily capping your upside potential. Not at all. It is entirely about protecting good, systematic trading from spiraling into emotional, impulsive gambling. Keeping your hard-earned profits is just as important as making them in the first place. By taking the time to set a hard profit floor, you are mathematically guaranteeing that your absolute best, clear-headed execution is what dictates your account growth, not your absolute worst, bored afternoon impulses.
If you want to finally stop negotiating with your emotions and start treating your trading like a highly optimized professional business, you have to build better discipline. Tracking your givebacks, reviewing your mistakes in real time, and aggressively auditing your sessions, that is exactly how you build a long-term edge in this game. And you can get 20% off TradeZella right now by using the exclusive link provided today. It is an incredibly powerful tool built specifically for this exact purpose, and I'm telling you, it will fundamentally change the way you analyze your behavior in the markets.
Let me leave you with this one thought to seriously consider before your very next session. If you sit down at the screens tomorrow, execute flawlessly, and find yourself completely green and up big by 10:30 a.m., will you actually have the data, the system, and the sheer discipline to lock that profit in? Or are you going to fall right back into that familiar, destructive trap and give every single penny back to the market by the closing bell? The choice, the system, and the rule, they're entirely up to you.